Welcome to our webinar series, Secondary Spotlight, that covers the dynamic world of the secondaries market. Here we explore the opportunities and strategic insights in the ever-evolving secondary landscape. Join us for a discussion with thought leaders that share their views and insights on a range of topics stretching from business, operational, to legal considerations.
Welcome to the fourth episode of Arendt webinar series dedicated to secondaries. And for today's episode, we are pleased to welcome Mr. Hani El Khoury, partner at Coller Capital in London. Thank you very much, Hani, for being with us today. And if you could say a few words about yourself and your firm.
Oh, of course. Thank you for having me here today. I'm very pleased to join you for this webinar. So thank you for that. So, as you mentioned, my name is Hani El Khoury. I'm a partner at Coller Capital on the investment side, based in London. I've been with the firm for 12 years. My focus is on origination across the secondary market for our equity flagship fund. Coller Capital, as many of you will know, is a leader in the secondary market. To a large extent, the first in secondary in the secondary market. We manage about 30 billion of AUM, focused solely on the private market secondary solution.
When Coller actually raised its first secondary fund back in the 90s, traditional LP-led transactions were absolutely predominant in the market. I wonder, how does that compare with your current daily activity, particularly in balancing between LP and GP-led transactions?
No, that's a great topic, and in fact, when we raised our first secondary fund, this is when the market was actually created. The market has, of course, evolved tremendously since then. But if we look at just the last 10 years, let's not go back to the 90s, but even if we look just at the last 10 years, we have seen the market quadruple in size. It was mainly a market with LP portfolios and what we called back then direct secondaries. It has now evolved into much larger LP portfolios, GP-leds, for both multi-assets and single assets, structured solutions, financing solution. In the past, it included mainly buyout assets. And today, you will find not only buyout assets, but growth equity assets, venture assets, credit, infrastructure, and real estate. So whether it's from the type of transaction or the type of solution that the secondary market to the asset class, we have seen a significant evolution in this market just in the last 10 years. Given the size of our team, we're a large team, and given our position in the market ecosystem, we see the whole market. So we tend from an origination perspective or from an investment perspective, we tend to see the whole market and even more than the market. So we focus on both the GP-led and LP-led side of the market, really with an opportunistic approach to constructing a high-quality, diversified portfolio that is resilient to any changes in market conditions. We are today in an environment where there's shifts in macro condition, there's a shift in inflation, interest rates. So we need to always bear in mind those shifting forces. And our focus is to build those resilient portfolios to weather all conditions. Whether it's on the LP-led side or the GB-led side, we think that today we are in a unique window of opportunity for the secondary market. And we at Coller are quite excited about the investment opportunity we have.
Impressive growth of the market indeed. But in one of our previous conversations, you mentioned a certain degree of commoditization of the LP-led markets, specifically in terms of deal mechanics. Could you maybe explain how the LP market evolved on the investment and execution side to reach such maturity today?
Absolutely, you're absolutely right. The LP-led market has evolved significantly and is today, like you said, a mature market that deliver consistent flow of capital back to LPs year over year. So the secondary market is today a well-used liquidity tool for LPs. LPs come to the market when they need liquidity, when they are managing their portfolio, and they are able to extract liquidity out of that market. Transaction volume have consistently delivered north of 60 billion per annum on the LP-led side. And as the pricing stabilizes, we expect this market to see significant growth. To give you a sense of the dynamic in the market today, 75% of sellers are using the secondary LP-led market for portfolio management purposes, right? And so that has changed over time. Today, it's really a very well used liquidity tool to manage your private equity portfolio. We are seeing transaction sizes increasing substantially. LPs are confident enough in bringing multi-billion portfolios to the secondary market. Given the maturity of the market from both an investment and execution perspective, we have also seen a significant rise in mosaic solutions, especially in 2023. More than 60% of LP-led transactions were mosaic solution. And for that to be able to happen, you need less friction on the investment side, and you need less friction on the execution side, which is where we are today, I think, on the LP-led side. We've certainly seen, deferred structured becoming widely accepted by LPs, mainly to bridge pricing gap. The way I see it is there has been enough volume of transactions and repeat sellers by now that the friction on the legal negotiations and the transfers has, generally reduced quite a bit. What tend to take more time today and is sometimes underestimated by selling LPs are more the tax implications and reporting and notification required on the different regulations. So you're absolutely right in how you describe the market, and we've seen nice evolution in that market to some level of standardization.
And what's the market's, or more specifically Coller's, approach towards due diligence process and risk management overall? Because I think that remains key for the buy side specifically in each secondary transaction.
No, of course. So due diligence is obviously a big focus for us. We have been in the market for more than 30 years. We have seen many companies, we have analyzed many companies, and we have accumulated a large volume of data and insight on private companies over the last 3 decades. But as a general, point on due diligence in the secondary market, the due diligence approach tends to be driven by the level of concentration in any single company. So the spectrum is quite wide in terms of the due diligence approach. It can go from a pure desktop analysis on a fund or a company, all the way to having management meetings with third-party due diligence materials that are more akin to buyout transactions. So single asset GP-leds, we're really getting close to M&A type due diligence with third-party quality of earnings materials or commercial due diligence materials to complement the due diligence approach for those types of transactions. On the other end of the spectrum, where you have diversified fund portfolios, this tend to be more of a desktop company and fund analysis, complemented by GP calls. Now, at Coller specifically on that part of the market, we also use our AI capabilities as an overlay to our, let's call it human analysis.
That's actually very interesting. I wonder, have you observed also any other similarities in deal mechanics or negotiation dynamics between LP-led and GP-led transactions? And if so, what drives those similarities?
Look, in my opinion, in the past, you may have had some similarities between those two, but today the similarities are a bit more limited, and this is really driven by the dynamics. You have really very different dynamics. In a GP-led, you are negotiating first with the GP. Whose role in every day is to do transaction and invest, and so the negotiation, I guess, intensity is different, and it's a different type of counterparty. You are negotiating not only in SPA for the transaction itself, but you're also negotiating in LPA to govern the partnership with the GP going forward. So it is not only a question of negotiating legal documents for the purposes of the transaction today, but it also, you need legal documents to govern your relationship or your partnership with the GP for many years to come. The important element also here is that the type of interest being transferred is fundamentally different, and the incentives are not the same. You know, in one case, you are transferring an LP interest from one investor to another investor. In another case, you are setting up a new fund that will acquire interest in companies. So those two tend to be quite different. You have a mechanic, obviously, where there's a new structure, a new governance, new economics, a conflict of interest that needs to be cleared. The stakes are different between the two transactions, and that drives a different negotiation environment and legal document process.
Mm-hmm. You mentioned also the use of AI, and my question would be then, do you think that there is some room for innovation in the LP-led market? How this evolution will happen, and specifically the use of new technologies and AI may apply to the industry?
Oh, of course. I'm happy to address that. So at Coller Capital, we've always been at the forefront of innovation in the secondary market, and we continue to be at the forefront of innovation. When it comes to innovation in the LP-led market specifically, we think there's a lot to do there. We believe that LP-led transactions lend themselves extremely well to using AI and machine learning techniques, given their diversification. This makes them inherently less volatile and therefore easier to predict than more concentrated GP-led transactions. The hundreds or even thousands of underlying portfolio companies require large volumes of data to be crunched and analyzed to be able to accurately forecast LP-led opportunities. AI can be used to analyze these vast amounts of data to identify trends, risks, and opportunities that may not be apparent to the human analyst. Machine learning models are able to capture difficult to quantify correlations, such as macroeconomic factors, when generating forecasts. This can help to identify undervalued assets, predict market trends, and mitigate risks. From a Coller perspective, we view AI analysis models as a complementary tool, right, to our traditional bottom-up fund analysis, increasing our efficiency and productivity and allowing us to make better decisions. I think in the short to medium term, we see the adoption of AI to continue growing as data availability increases, both from more detailed GP reporting through third-party data providers. AI models will continue to increase in accuracy and will provide GPs that adopt the technology with the speed and information advantage. So I think that what is to come in that space is very exciting, and we are at the forefront of that innovation.
Perfect. So I wanted also to ask you about the geographical aspects of secondaries, in particular in terms of which geographies are currently interesting for secondary investors. And in this respect, is still Europe actually among these, maybe even Luxembourg?
Yes, no, of course. Look, not surprisingly, the shape of the secondary market mirrors the primary market. On the secondary side, US and Europe are the bulk of the transaction volumes. There's a lot obviously happening in the US, which is sometimes a step ahead. But Europe presents a very attractive investment opportunity today with high quality assets in private markets. So I think the US and Europe provide strong fundamentals for the secondary market. I think from our perspective, we see Asia as an attractive geography when it comes to the secondary market. We are very well implemented in Asia, and with a number of offices there. We think that the secondary market is evolving and will continue to evolve, and we think that geography specifically will be an interesting one to watch. On Luxembourg specifically, I would say that the growth of the secondary market will drive a continued increase in fund structure, and Luxembourg should naturally benefit from that. Unfortunately, I cannot provide more insight today, but my gut feel on the structuring aspect is that Luxembourg should be a beneficiary of the growth in the secondary market.
Thank you very much for this positive note, which I think perfectly concludes our conversation today. Thank you very much for our entire discussion. It was extremely interesting, Hani, and thanks also to our audience for listening. Thank you very much.
Thank you so much, and thank you for having me here.
Thank you for listening. We hope you found it interesting. If you would like more information about secondaries, we invite you to visit our website, www.arendt.com. If you don't want to miss our latest episodes, please feel free to subscribe to our newsletter to receive our invitations.